All right, we're about to start 22-2 work together, which is on creating our income statement, statement of stockholders' equity, and balance sheet. So we have 3 steps. They are a little bit on the long side because of the number of accounts that we have. So I'm just going to scroll down here. We have our adjusted trial balance that we just completed in 22-1. It says using the adjusted trial balance for Travel Light Corporation, complete the income statement for the current year. Merchandise inventory beginning balance is this, and they've given that to us listed here, $32,158.15, and we need to calculate and record the following vertical ratios: A for cost of merchandise sold, B for gross profit on operations, C for total operating expenses, D for income from operations, E for net addition or deduction resulting from other revenue and expenses, and F our net income before federal income tax. And we're going to round these percentages to the nearest tenth of a percent, or hundredth of a percent, excuse me. So we have our our adjusted trial balance here, and I'm just going to put that up top here. And you can see they have the heading already started for us, so nice of them. Remember that an income statement is for whatever the fiscal period is. For this, it happens to be a year ended December 31st. So now what we need to do is start plugging in our information. So remember that operating revenue is the main way that we as our company make money. And we know that that is from sales. We need to go find our sales amount, which is $587,934.15, and we plug that in. 587,934.15. Then we take out our sales discounts and sales returns and allowances, which are 10140, and sales returns and allowances. And then what we do is we add these two together, sales discount and sales returns and allowances. Those two totaled equal $5,184. And then to find our net sales, we take our sales amount and subtract out any of the returns that we had over the course of the year. And we wind up with net sales of $582,750.15. Now, we'll come back and do our percentage of sales later. So I'm going to leave these blank and just continue on down the line here. So now we need to find our cost of merchandise sold. So again, it says what was our beginning inventory balance on January 1st. Remember that they gave that to us in this paragraph here, $32,158.15. And then we need to scroll and find our purchases, which are listed in our adjusted trial balance, $388,732.40. And then we need to take out our purchases discounts and purchase returns and allowances. So purchases discounts were $27,41.80. Again, I'm getting that number from my adjusted trial balance up here. And my purchase returns and allowances were $135,807. And again, just like we did with our sales, we're going to add those two numbers together. And that ends up being $4,099.87. And then to get our net purchases, we take our purchases amount and subtract out any returns that we made, and we end up with $384,632.53. Now, as we come down here to get our total cost of merchandise available for sale, we take our beginning inventory and we add any purchases that we made over the course of the year to that, and we wind up with a total of $416,790.68 for our total merchandise that's available for sale. Now we come down here and we have our ending inventory as of the end of the year. So we need to find merchandise inventory, which I believe is right up here in our assets section. It's the only one that's kind of out of the way, I guess you could say, but merchandise inventory is an asset. It's the one thing that's kind of funky because we do need it in order to find our cost of merchandise sold. So we plug in that $45,058.15, again coming from our adjusted trial balance. And that will give us our cost of merchandise sold. So we take our cost of merchandise available for sale and we subtract out our merchandise inventory and we get 371,732 and 53 cents. Now, in order to find our gross profit, remember that gross profit is our net sales subtracted by our cost of merchandise sold. So when we do that, we take net sales minus cost of merchandise sold, we get gross profit of $211,017.62. So that's our gross profit. Now, of course, there are a number of things that we need to pay in order to make our business run. So we need to take out all of our operating expenses. So operating expenses start with advertising. So we're just going to start with our adjusted trial balance. We're just going to run through all of these numbers right down the row. So we've got advertising of $7,973.50, cash short and over of $458, credit card of $5,033.47, depreciation expense $2,250, insurance expense of $3,000, miscellaneous expense of $434.10, payroll of $7,483, rent is $14,457.50, repairs is $17,442.50, salary is $79,482, supplies is $1,150.04, and keep scrolling here. Uncollectible accounts is $3,675, and utilities is $430.50. Now, we would go back through here and total all of our operating expenses, starting with advertising all the way down. And when we total those, we end up with total operating expenses of $134,923.19. So then to get our income from operations, we need to take our gross profit, which is $211, and subtract out all of our operating expenses, $134. And when we do that, we get income from operations of $76,094.43. $76,094.43. Now, there are a few other ways that we earn money, which include our other revenue section. So if you scroll down on your adjusted trial balance, you're going to see these at the very bottom. So our interest income here is another revenue. So we're going to put the $584.74 there. And we also have some rent income of $1,000 and a gain on a plant asset of $55. So when we total that, our other revenue coming in is $1,639.74. And then we also have a few other expenses. So we have interest expense of $1,370.65 and a loss on a plant asset of $124. So we add those two together. Those are our other expenses. And when we do that, we get $1494.65. So what that's going to do is give us a net addition, it's called. So since our other income is greater than our expenses, we're going to be in the positive here. You could also be in the negative if your expenses are greater than the revenue coming in. But since ours is going to be positive, and it's positive by $145.09, which is simply the total other income subtracted by the total other expenses, you get 145.09. So that's going to give us a net income before federal income taxes of taking this 76,094 and adding our little bit of an addition here. So we end up with 76,239 and 52 cents. So we can't forget our federal income tax expense, which was 14,171.44. And when we do that, we subtract those because we're paying that to the government, which is eventually going to give us our net income after federal income tax, which is $62,068.08. So that is a completed income statement with all of our information. Now, the thing that we have to continue to do is our vertical analysis, rounding to the hundredth. So remember that when we're doing a vertical analysis, it's always a percentage of sales. So sales is going to be our 100%. And so every number that we're looking for, we're going to divide it by our total net sales amount. So if we scroll down here, we're going to take our cost of merchandise sold, which is 371,732.53, and we're going to divide that by net sales, and we end up with a percentage of 63.79. And we do the same thing for gross profit. We take 211,1762 and divide it by our net sales amount, 582,750.15, and we end up with 36.21. We also need to do our total operating expenses. So again, taking our amount of 134,923.19 and dividing by our net sales amount, we end up with 23.15 when we round correctly. Again, our income from operations, 76,000 divided by our total net sales is 13.06. Scrolling down, we also have our net addition from other revenue and operating or revenue and expenses. When we do this, it's very small. It's 0.02 because it's only 145 divided by 582,000. And then we have our net income before federal income tax, which is 1308. Our federal income tax adjustment is 2.43. And lastly, our net income after federal income tax is 1065. So that's just doing our vertical analysis. We take each of these numbers in our very far right column and we divide it by our total net sales, which is 582,750.15. So that is an income statement. You can head over to part 2 of our work together videos to learn how to do a statement of stockholders' equity.